Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my weekly market update. I titled today, Will Markets Bounce on Fed Hike? This is the 13th of March, 2022, and my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I welcome comments via email or YouTube. I try and respond individually. Please click the up or down thumb based upon your opinion of my presentation, and please subscribe. That will help you get notifications. Disclaimer, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I use the tools that I paid for and I use every day in my trading, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I'd like to welcome you all to the upcoming Wealth 365 event, April 4th through 9th, 2022. I'll be speaking on the 4th and the 9th. For those that are interested in wealth charts or some of the add-ons or marketplace indicators that you'll see from some of the various educators, it's a great time to buy them because typically you'll see discounts. I'll put the link for registration in the verbiage underneath the YouTube video. I like to look at the market for 1 day, 5 day, and overall return off the highs. On the 1 day return, Scott Majors are just a list of some of the major market indexes and ETFs. You could see on 1 day, oil, commodities led even with the dollar up. And the laggard over, forever, Dow is ARK. Bitcoin was down 4%. The major indexes, the NASDAQ led minus 2.1%. If we look at the 5 day return, you can see ARK, commodities, and even oil led to the downside as oil and gold had a sort of a climax run midweek. And if you look at the percentage off the highs, you can see the NASDAQ is leading the major indexes now in a bear territory, minus 20.6. The Russell's down 19.5. The Spider is 12.5, and the Dow is down 10.7%. For those who believe in buy and hold, imagine if you had your entire portfolio in ARK Innovation, you'd be down 58%, 54% Bitcoin, biotech 32%, FANG down 30%, and the IBD 50 ETF also down around 30%. How impressive is that? If we look at spreadsheet of some data from the NASDAQ, no Hindenburg, you wouldn't expect it, you're not at a high. And what's most notable here is the high level of new lows and almost no new highs, the predominantly negative AD line. Interestingly, because of strength in the market on Wednesday, there actually was a kahuna, which is a positive momentum because it's green on the NASDAQ. If you look at the last 2 weeks, the NASDAQ is down 6.3%. It's a pretty big 2 week loss. You wonder if there's not an oversold bounce coming. When I look at the NYSE, you actually had new highs to go with those new lows. But what's worrisome here, we had a Phoenix, which is a follow through to the downside on Friday. Over the same period of time where the NASDAQ was down 6.3, this is down 4.1%. EdgeRater takes the stocks in the S&P 1500 and assigns them to deciles within the Bollinger Bands. The midline of the Bollinger Bands is a 50-50 count, and you can see 2/3 of the stocks in the S&P 1500 are below the Bollinger Band, or below the midline of the Bollinger Bands. Very few stocks are above or below, so not a signal here except it's bearish. AD line of the NYSE has rolled over. You've got lower highs, lower lows. That's a downtrend. Here are all the major market ETFs that have rolled over, as has TLT. The key to which ETF is which is up in the upper left-hand corner. Here we have the stocks above the 200-day, stocks above the 40-day, up off their lows, but still in the lower part of the chart. And these are the T2121, the 13-day or week rather, new high, new lows. This is the one that's getting closest to reversal land, but it still has quite a ways to go before something feels imminent. Speaking of imminent, Wednesday, 2 p.m., FOMC announcement clearly will be a market mover. Now, everybody knows it's a 25 basis point move. If he was to make it less than 25 basis points, that would probably hurt the market, don't you think? And if it's above 25 basis points, it'll hurt the market. I think 25 is in cement. What we need to hear is how is Ukraine impacting on their projections of going forward? And do we still have, as Bank of America was first to point out, 7 increases coming this year? Also, a huge week for earnings. It's a mistake to not know when your earnings are due. It's a judgment call of what to do with your stocks. Typically, if I don't have a lot of gains, I'll sell and consider re-entering. If I have a lot of gains, I may hold on. And if I'm not sure, I might buy some put protection. So there's a lot of things you can do, but ignorance is not what you should be following. Here's my thoughts for this week. You can see last week's thoughts on the left. Still a war, news will drive it. Much more talk about increasing supply beyond Iran, with OPEC increasing, further reserve releases. Again, as I said last week, watch for the bottom to drop out of gold and energy if the war ends. Heck, Putin just had to say something good on Friday and they dropped at the open. If things get worse, if they take over more nuclear plants, expect them to go higher. Still have inflation, CPI high, but not event. Not a time to be a market hero. I have less positions than I normally do. I go both ways, long and short, and my positions are smaller. Now, we're at a point where I expect, because of wedges forming, the market to do something. And wouldn't it make sense for the market to be weak Monday and Tuesday and then have a relief rally after the Fed speaks on Wednesday, hence the title of this program. No guarantees, just a thought. Again, just remind you about the Wealth 365, and I will have the link in my YouTube written section. Let's take a look at the major indices. We'll spend some time on the spider because it's they all look the same. So the SPY had a great move up, as we know. Clearly something happened with a peak January 4th. The market's been in a downtrend. I'm not the world's best trend line drawer, so I could certainly adjust this some. But the point is simple. We are at resistance here. We have support here. When they come to this together like this, it's a wedge. Every time we hit support, as we did, we closed on Friday, we bounce. When we hit resistance, we bounce. Something's got to give because we're about to come out of this wedge. Will we break out and retest the 200 and go higher? Boy, wouldn't that be great for the bulls? Or do we break down and start to test this new intraday low that took out the January 24th low and occurred on February 23? It will be very interesting to see. Notice all 3 indexes, the daily, weekly, and monthly bongos are red. Now, I could talk the same way about the Qs, the diamonds, the Russell, that all have the same pattern. The VIX actually came off Friday morning with Putin's comments and closed the day higher, therefore it's an open green candle. It closed right about where prior support was. Wouldn't that be wonderful for that to be resistance and for it to sell off? And the dollar is living at multi-month, probably multi-year highs. When you look at the weekly, you could see that the dollar's come a long way, but if you go back to March, well, let's look here. So June-ish of 2020 are the levels we're back to today. The gamma charts, they help me to know where I'm at. Right now, they're the same every week. We've got sell signals across the board. We've been down here for so long, we're starting to see the moving averages roll over. It just takes a lot longer to recover. This does not appear that it wants to be a very quick V-shaped recovery. Commodities, let's just call out for a couple of things here. For example, gold. I don't know why it's doing that today. Probably I got too many things open. Let's try one more time. If not, I'll just talk about it on the little chart. There we go. Gold, as I said, peaked early in the week and then gapped down on Wednesday, which was a strong market day. Thursday, it closed up on the day, but lower than it opened. Friday, it gapped down on Putin's comments, but closed higher than it opened. And therefore, you got the open and greenish box. So gold ran up. This is what you expect to see if we settle. In fact, if this Ukraine thing settles, you expect it to come all the way back into this territory. The issue is no one knows if it's going to settle. And will it go higher before then? Probably. If we look at oil, similar pattern, a peak, reversal. Now it seems like it wants to go higher again. So it'll be interesting to see if the commodities go higher this week, at least until the Fed speaks. But all this is going to be news driven and dependent upon Ukraine. Market theme, well, if I look at the daily IWB versus IWM, when it points to the upper right, that means large stocks are in control. When it points to the lower right, small stocks are in control. We've got sell signals driving it down. We're pointing to the lower right. That means small stocks are in control. If I just look at the hourly, it's pretty clear what's in control. It's down here, it's small stocks. If I look at growth versus value, similar picture, values in control. And if I look at the 1 hour, again, pretty clear. It's not just a one-day wonder. Value is in control. So it looks like small cap value, at least as we start the week. If I look at the S&P sectors, what really stood out to me was XLE is still strong. Industrials picked up some. Healthcare picked up some. Utilities, staples, and real estate, the defensive sectors have come off their highs, especially real estate looks weak. So energy, industrials, and don't forget XLB, materials. So now the fun stuff comes in. I've gone through, it's hard for me to want to be very bullish, but the market, I'm expecting a bounce. I just don't know if it's going to be meaningful or just a bear market rally. Don't know when it's going to occur, but it's hard to really want to short the market here after it's sold off so much. I'd rather short it when it rallies back up and fails at resistance. So, sector scanner, love this tool. I basically can rank by algo score. I can identify that energy, utilities, and basic materials are the leaders. Now I saw healthcare creeping up, so let's look at that as well. If I hit compare, I'll bring up the industry groups within those sectors. I usually will identify the first 10 or 15, so let's just go through chemicals. Then I can compare. Now I get a list of the stocks in those groups, and I would typically look at all those up to 750 or so on the bulls. So I would perhaps stop here, hit my shift key, hit that, whoops. All right, let's hit this one. Let's go to the top, hit my shift key. There you go. So I've covered all those, and then I'm going to make sure I've got my bullish weekend review watch list set as default. I have my bearish one, and I can add these. I've already added them. This is not my first shot at doing this video. I had a couple of issues come up with the audio. All right, so that will hold them. That's a bottoms up approach. So what I did is I identified the top industry groups, top sectors, then top industry groups, and the top stocks in the top industry groups. Bottoms up, I might look at everything. Whoops. So I might want to hit all the sectors, not just the top ones. Compare will bring up all the industry groups, so I might hit all of them. Compare will bring up all the stocks, and then I might want to look at here all the way down to 750 again. And I've already done this, so I'm just going to hit the shift key and then pretend I'm doing it for the first time, hit to add to watch list. So the first way of going through sector then industry groups would be a top-down approach. The other way would be bottoms up. Now I've done this for both the longs and the shorts. So now the question is, what do I do with that list? Well, I could go into Wealth Scanner, and since I'm bearish on the week, I could pull up my bearish weekend review. Let me just say I'm mixed to bearish on the week because I've got both sides. And you could see what comes up to the top, Autodesk, for example. Now, do a couple things here. I like to buy contra ETFs and short the market instead of individual stocks. But when I short individual stocks, I want to find things that have retraced up into resistance and break down. So Autodesk is a leading stock to the downside, worst wealth score, but boy, it's already beaten up. And that's unfortunately the case today with a lot of the stocks that come to the top here. There are some that look like good shorts, and I hope to be able to point them out to you. Adobe, for example. This would have been a great short here as it retraced, and it's probably a pretty good short here as it's pulled back into that descending 17-day moving average. Notice that the relative strength is broken down. It broke down on the weekly over here, and you could see that gave us a great signal to consider getting out of this market. On the long side, I can do the same thing and look at, again, which are the strongest rankings by the algorithmic score within charts. Bullish, let's see what comes up to the top, and you'll see, I think, Vermilion, which has been one of the highest for a while. And again, one of the challenges with the stocks that have been doing so well for so long is that they might be tough to buy because they're extended. So you could take your list, you can apply them in here. What I really am proud of is what we've put together with the CAT scanner. So let me basically show you how I use this. So let's kill the filters and let's start on the long side. So let's bring in the stocks that are on my weekly review, those stocks that I did from the top and bottom down. So there should be a lot of stocks there, so there must be something in here that's blocking that. Let's see. Lower the price to $5. So this is bullish. So I want $5 stocks, 500,000 shares traded. Bullish dots greater than or equal to 1. Bearish dots less than or equal to 1. I like it in a squeeze. We'll play around with that. I want my Bongo weekly to be bullish. Bongo daily for first run, I don't care. And now I'm going to hit apply. And so the stocks from a large list, there's over 1,000 stocks in that list, some of the leading stocks based upon these parameters come right to the top. So I know there's a couple here that I like a lot. Regeneron. So here's a stock that has probably one of the biggest of the biotechs. It's been loose here. I much prefer tight stocks, but that's not what you're going to see in this market today. Sort of had a wedge here and broke out on Friday. Had a wealth signal, had my EMS signal. It had one star or one bullish dot on Friday, and this would be a high volume. You can see the volume is high there. Notice how the relative strength versus the moving average has gone hyperbolic. I think this is a beautiful breakout. It's still below all-time highs or recent highs. This is Regeneron. This is one that I like, coming out of a squeeze. Itfs is intracellular therapeutics. This one's a little bit more extended. The high jump is at 72, but it pulled into its 17-day and broke out with an EMS and 2 dots. Now, Star Bulk is another that I like, and this is one of the shippers, dry bulk. You have to watch the dry bulk index to get a sense of what they're doing. That index is going up, and you can see this thing pull down to the 17 in a squeeze. It threw the breakout dot, which is the second dot up, and this one looks like it wants to go higher. I do own that. My favorite in that group, which we talked about a few weeks ago, and to me is one of the best stocks in the market right now, Zim Shipping, and you could see it looks much different than most of the other things that you're looking at right now. The problem with it is how do you buy this? Well, you could buy it right here. In my opinion, it's got a multiple of 2, and they just had earnings come out that were incredibly strong. Now, I could give a little bit more leniency here, and let's go and say market's been pulling back. So I don't care if your weekly bond goes bearish or bullish, but I only want things that have a bond go daily bullish. And we'll leave the squeeze on. So these should be stocks that are reversing perhaps off of a pullback. And if you look at American Tower, not TD Ameritrade, my bad. Here's a stock that is fallen off a cliff. Okay. And again, shorting it on the reversals. This could be a place to be shorting this stock. But I look down here, it's a squeeze. It had dot number 2, which is breakout, but I don't like how it finished. It's more of a shooting star appearance, but relative strength had picked up on that. So again, once I look at Bongo Daily being the only trend that has to be up, the weeklies are down, and you're just starting to see a recovery. Anything else here that I liked? WRB, I think this is a publisher. This group has broken out. I've missed this stock. This where my plus is right here. This is when I should have bought it. Breaking out above the 17. It had an EMS signal. It had 3 dots, momentum, breakout, and volume in a squeeze, and it's really gone up. I look at this, the high jump's 81.50. I have a hard time chasing that. I'd rather find stocks that are setting up. Now, the squeeze to me is important because it helps me identify stocks that have not already broken out and gone too far to buy. So let's look at what happens. Let me change a few things here. Let's take out the Bongo Daily. Let's leave the weekly at just bullish. And let's take out the squeeze, and you'll see how many more are going to open up. Much bigger list comes out. The squeeze really tightens down the stocks that I might look at. Now I just want to look at stocks who are in a longer-term uptrend, and let's look at stocks that have the most dots. KRA, I think, is a takeover. It looks like it there, so I'm not going to spend any time on it. It could be just big earnings and gone sideways, but I doubt it. Amphenol, this is one that, Amphistar Pharmaceuticals, this one broke out on Friday, 3 dots. Notice what happened with the difference between the 3 dots and the squeeze, where it was not so far run that you couldn't buy it. This was very buyable here with a fresh EMS breaking above the 17-day moving average. And now look at what happens. Now, do you want to buy this? It ran up from 29 to 34, 35 in one day. That's extended. The high jump bar is 100%. It's hard to chase. So you see the benefit just in a single stock. Look back here in a squeeze. These were bearish signals until it broke out above its moving averages with that beautiful fanning of the moving averages. Petrol, this is an international integrated oil play. You could see it's been an uptrend on all 3 time frames. It's 84% on the high jump. I probably wouldn't be chasing it here. So my point here is that if you're looking for stocks that have not had a chance to run, you want to look at stocks that are squeezing. Not to say that the other stocks won't do very well. BCE pays a dividend, Canadian telecom play. And again, you buy it down here, coming off the 17 is a lot cleaner buy, in my opinion, than buying it up here, even though it's got 2 dots. I like the squeeze because it keeps them close. So I just showed you some of the approaches I take to find bullish stocks. Now let's look for bearish stocks. So let's switch the weekend review to the weekend short review. We're at 24 minutes, so we're doing fine. No surprise, only 2 stocks on the short review had bullish characteristics that I want to look at. Now I want to change my things around. Since I'm looking to short, let's make the stocks at least $25 and 500,000 shares. I got to flip this less than 1 bullish dot and greater than 1 bearish dot. Let's leave the squeeze on, and let's start with Bongo Weekly bearish. We'll leave the bullish one off, and let's see what we can find. A lot of stocks with bearish signals. Let's rank them by dots. Let's look at something expensive. ARE, Alexandria Real Estate. So this one looks shortable. If the market is weak, I'm in a squeeze. I'm not extended to the downside yet. I pulled back into the moving averages, broke down below the 17, pulled into the 50 moving on the weekly. This is stocks that I like to short. I like to put my spot that I'd be looking at below the current price, make it move my direction. Again, I like to short more expensive stocks. What about Novardisk? Not yet, but it's getting tasty. Here we have 2 sell signals, dots in a squeeze. All the bongos are red. Break down below this 200-day moving average. You could come down all the way down to this level. All right. So there's a lot of potential stocks here to look at for longs and shorts. AMD, we all love AMD, but AMD is broken. All right, would I short AMD here? Absolutely not. AMD could rally in one day back up to this 50. But if it rallies up to this red line 200, as it is done here on the 50-day, 50 weekly, and it breaks down, it's a potential shorting candidate as well. So the point to me of a scanner, and my intent today is not to give you picks to go short and go long. I'll show you some of my choices as we end up. But to show you how I use the tools in a 30-minute video to help me simplify my life. Believe it or not, this is simplified. And to use it to find high probability setups, to put the trades in, go to work, and come back and see how I did. And that includes stop management. So let's take a look under watch list. As I said, these are big lists, and let's go and look at my weekly buy watch list. This is not a very big list. This is a list of stocks that I'm going to start off the week watching. Several of them are getting close. Several of them we've already seen. Many of them I already own. Tech. This is a stock that is one of the leading stocks right now. It's extended. I wouldn't necessarily buy it here, but if it pulls back into that 17 like it did here, pull back here, and starts to give me new buy signals, I might be watching to add to my tech. Pfizer is one that's pulled back that I thought was interesting. Pulled back into the 200 and bounced. I've now got a daily bongo. I'd rather clear the 50. Pays a nice dividend. You could see how where support is, but you kind of know what your downside is. And 6% of 50 is 3. Your downside's at 47. This is tradable here, in my opinion. ITSE was one we already talked about. I'm in gold fields. Again, I'm here mostly to watch it. I don't think I'd be buying it here, but a pullback to that 17, this might be one I want to look at. DAC is another one of these bulk shippers. Pull back into the 50, got an EMS signal and breaking out. I think this one could be bought. It's not a cheap one. Nucor, a leading steel play, pulled back to the 17, breaking out. Even X, again, I own some of this. I'm not sure I'd be chasing it here, but steel stocks are hot right now. And then anything else here that, the other one that's really on fire are fertilizers. This is CF. We've talked about this so many times. Every time it pulled back into the 50 here, it set up a buying opportunity. And when you would get in, when those dots started showing up, when that EMS indicator started showing up, gave you lots of times in. I guess if I had to pick my favorite stock besides Regeneron, who's somewhere on this list as well, it would be this one, BCTX, Brain Cell Therapeutics. Don't know anything about this, even though it's medical. Why did I like it? It was a 3-dot. So you had momentum, breakout, and volume on Thursday. And then it had a gap up on Friday. Now the thing, it had a EMS signal on Friday. It hasn't had enough history to give you a monthly bongo apparently. Its relative strength is taking off. And why do I like stocks like this? Because I know where to put the stop. Probably down here around that 200. Would I buy this? I might buy this. Should you buy it? Consult your financial advisor. Again, I'm showing you patterns and how I like to take them. If you want to see the shorts that I had, I'll see if any of them have the pattern I like. Now, last week, my shorts gave me a lot of clues. As I said before, I like to buy contras sometimes as much as I like to short individual stocks. But there's some things here like SPGI. Pull back into the moving average here and potentially can break down and set new lows. It's in a squeeze. I like that. Some of these past leaders, ASML, man, this was a killer last year. Well, you wanted to short it up here. You wanted to short it up here. Probably wanted to short it in here. Let it run up and break down again. Home Depot. We love Home Depot. Look how far Home Depot has come down. And again, you could short it here at the 17. You could probably draw a trend line in there. Let me just do that for fun. I mean, this is probably a place to short it. Put your stop somewhere up here. So that's something I might look at. Again, these are just talking about how I'm looking at things and not investment advice. So, what did we do today? I gave you some introductory comments about the market. We looked at sectors, industry groups on a top-down approach. I do that both to the bullish and the bearish. I built an additional approach bottoms up. I built 2 watch lists, and then I used my scanning tools to identify stocks within the watch list that looked attractive for buying and selling. I think the important thing today about this market is it's a tough market. I'd be very careful before I commit large amounts of money. When's an all clear sign? Well, you've got a lot of damage here. You can wait till you take out the prior highs, but then you're going to miss a lot of the recovery. Wouldn't it be nice to see a base, some sideways move in the major indexes, and then on big volume start to move up and take out 200 and the 50? And for those that have been following me for years, it's going to be those dots. And if you, just for those that are wondering who've been following me, what's in those dots, let me just look at a stock. And let's go, and we'll look at this here. The top dot is a big gap up. It's similar to a Bible gap up, but then I filter it for where the stock closes. I don't want to buy stocks that gap up and close near the open. So that's a big gap up. The second dot here is volume, and you can see big volume. So big gap up on volume. Isn't that wonderful? The third dot is a breakout. Well, we had a nice little consolidation into the 17 and it broke out. And then the fourth dot is a marriage of the kahuna and the force, two of the momentum things. So when I see those dots, the more dots I have, the more conviction I have. This note, I'm going to say goodbye. Have a wonderful week. I've gone a few minutes long, and I hope to see you April 4th to 9th, well, 365. I'm going to put this into the note. Bye, everybody. Have a great week.